Okay, hello everyone. Thank you for joining on this another live stream today. So this is the 2nd of August and this is on Monday. So yeah, new week started and new month has started already. And it looks like markets are retracing and ranging right now on this Monday. So I think this is a good timing to run the tester and explain about my strategy in multiple time frames. So today I will run the Forex Tester 5, which is my favorite tool for backtesting, and we'll look at the backtesting chart before previous chart, and yeah, discuss what to decide, whether to buy or sell on these backtesting market. So let me squeeze my face and yeah, just a quick disclaimer. This information today on this live stream is based on my own experience, knowledge. So when you take trades, please do with your risk management. And if you can follow the guidelines and rules on this live stream, that would be great. So how are you everyone? How's it going? Looks like markets are a bit ranging, retracing. So yeah, I think it's time to yeah, just be away from the charts today. I was actually paying attention to a couple of pairs that were trending on the daily charts, but yeah, it looks like they are going backwards now. So yeah, so let me switch it to the Forex Tester 5. Hold on, let me get it here. All right, and I see the chats here. People are joining here. Thank you for joining, everyone. George, Tyro, and Suresh, Nasser, Anthony, Asif, Muhammad, and Vin, Tyler, Dean, Gustavo, and Dan. Thank you for joining, everyone. Sorash, great to see you too. Okay, so yeah, let me switch it to the Forex Tester 5, which I run over the Windows. So this is Mac, and I have to launch the Windows and run the tester, and here it is. Okay, so this is usually how I run the tester. I place 3 windows, and one is daily chart or the forward chart, which is located on the upper right, and lower right, this is either 1 hour chart or the 30-minute time frame, and on the left, this is the 5-minute chart or the 15-minute chart. So initially, I lay out the chart like this, and simply first of all, I focus on the daily chart, and once I see the daily chart to be trending or the forward chart to be trending, then I go down to the mid time frame, 1 hour chart or the 30-minute chart, and if I also see the trending market by this mid time frame, then I go down to the 5 or 15 and look for an entry chance. And for those who are new to Forex Tester 5, you can come to my website and click on the Forex Tester 5, and you can have a full description on my website about the Forex Tester 5. I can put the link here on the chat right now, so you can yeah, just refer to this what's in this Forex Tester 5, and when you purchase, you can just input this coupon code FT5BYKEY, and you get discount 5% on top of the sale. So make sure to purchase. Click here to purchase order, and if you want to order it, please make sure to put the coupon code. Okay, so yeah, so anyways, so this is how I lay out initially on this Forex Tester. So yeah, let's get started now. So yeah, so here is Euro USD, and initially, so I only look at the daily chart, so I will enlarge the daily chart like this, and I only show the daily chart. So this is a chart back in 2012, So this is not the real-time market. And yeah, let's see. So I will move the candles one by one in this daily chart until the market trends. Right now, the market is not really trending. It is bearish, so I expect the market go down continuously. But as per Ichimoku confirmations, I see the Kumo's flat and the Kijun-sen flat too. Let me enlarge the screen, the chart. Yeah, so if I can just enlarge like this, then you see the Kumo's flat and the Kijun-sen flat right now. But there is a breakout. There is a breakout of the support level, which is over here at 1.30. Looks like the market initially broke the run number and now it's heading backwards. So yeah, in this case it could be into the range or continuously go down. So we have to wait until this breakout becomes a sign of the downtrend or not. If not, then the market will become range, and as a result, you know that this is a fake breakout. So I will move the candles one by one until I see the downtrend, clear downtrend as per Ichimoku lines. And also right now, in this case, I can see that the Chikou span is also too close to the candles, and this is also the sign of the range. Yeah, so if you run the tester, you can initially lay out like this, and you can just move the candles one by one. If you just press space key, then you can move the candles one by one. So let's move on to the next candlestick. Okay, so here's the next candlestick. Next day became bearish, but still you see the Kumo flat, Kijun-sen flat. The Chikou span came below the candles. This is a good sign of the potential continuous downtrend. And also we can see that there is an engulfing structure. This is called the inside bar. The previous day's high and low has been engulfing the next bar. So in this case, I wait until the market breaks the support level at, in this example, at around 1.2958. I wait for the breakout, and afterwards look for the sell chance. Otherwise, the market could be still in the range because of this inside bar structure. Yeah, so let's move just one more candle. Okay, so now there is a breakout. We got the breakout. So from here, I expect the market continuously go down this way. Yeah, now we have also Kumo, Senko span B is pointing down, Senko span A is also pointing downwards, and Kijun-sen is also pointing downwards, and Chikou span below the candles. So this is, oh, hold on, let me squeeze my screen so that you can see the Chikou span clearly. Okay, so you can see the Chikou span is below the candles here, and this is the potential new downtrend. So from here, I look at the lower time frame. I say middle time frame, 1 hour chart or 30-minute chart, and see if the market is downtrending. And this is actually the case in the daily chart, right? In the daily chart, we saw the downtrend, but how about forward chart? In terms of the forward chart, let me switch the time frame to forward chart, and here's 4. So in forward chart, you saw there was a Kijun-sen down, Kumo down, a couple of hours later, a couple of hours before. So it was exactly here. That forward chart went down also, and this was actually the breakout by the forward chart. And you see the Kumo Senko span B down, A down, and Kijun-sen down too in the forward chart. So if you look at the forward chart, this is the good timing also for entry on that day. And I will just look at the 1 hour chart from here. So let me switch it to 1 hour chart, and here it is. in 1 hour chart, we still see the Kumo flat and Kijun Sen flat. So we are into 1 hour chart now. As you can see on the upper left and also here, you see this is 1 hour chart. And right now in 1, it's flat, right? Kumo flat and Kijun Sen flat. So right now 4 hour chart is going down, but 1 hour chart is flat right now. So usually I wait until 1 hour chart also go down. So that means I also wait until the Kumo points downwards and also Kijun Sen points downwards in 1 hour chart or 30-minute time frame. Okay. So yeah, it might be a bit confusing at first time the way I look at the markets, but if you master it, becomes very, very powerful. Yeah, this is how I screen the chart every time. So I screen the charts 3 to 5 times per day, and this is basically what I do. So simply I wait until 1 hour chart point down or the 30-minute chart point down. So let me switch it to 30-minute chart. Okay, in 30-minute chart, this is also flat Kijun Sen and flat Kumo. So we have to wait until they point down. So let me switch back to 1 hour chart and move the candles one by one based on 1 hour chart. So let me just forward the candles like this, just one by 1 hour chart. Okay, so here now I see 1 hour chart is going down. I see Kumo's down and Kijun Sen points down too. And also Chikou span is located below the candles. And this is another new potential downtrend. Yep. And if you see 1 hour chart to be downtrending like this by Ichimoku, then you have to confirm also, once again, higher time frames to be trending. So let me switch back to 4 hour chart. Okay, so here's 4 hour chart. In the 4 hour chart, I see that the Kumo's a bit flat, but Kijun Sen is pointing down. So let me switch it to the daily chart. And on the daily chart, this is downtrending. Yeah, on the daily chart, the Kumo's down, and Kijun Sen is down, and also Chikou span is below the candles. Yeah, and also if you look at the 1 hour chart, now exactly you see the Kumo's also down, and Kijun Sen is pointing downwards. So from here, I expect the market go down this way. And this is exactly where I look for the sell chance. And in this case, also make sure to draw lines. So there is a previous support level here. So the market might test the support level and goes backwards. That's one of the scenarios. And also, if you can look at the downtrend, you can draw the descending trend line in this example. You can draw the descending trend line like in this way. So you can see the market has been bouncing by that line twice and 3 times here. So if this downtrend is persistent, then the market might test the trend line but still continuously go down this way. And with that in mind, I look at even lower time frames, either 5 or 15-minute time frames, and look for an entry chance. So I hope you understand the concept so far. And if you want to know more details about my strategy, then you can once again come to my website and click on the free download and click on the case trading strategy, KTS. Then you can launch this page and you can find my video about introduction video of my strategy, and also you can download the PDF for free. So after this live stream ends, you can just download the PDF and also watch the video to have better understanding on what I talk about today. So anyways, this is a potential downtrend, so this is where I look for the sell chance. So let me go down to the 5-minute chart. Okay, so here's 5-minute chart. And this is where I will look for the sell chance. This yellow line is the descending trend line by 1-hour chart. And the market bounced here, and it is going down this way now. And from this bounce, I can see a good sign because there is a reverse N wave in 5. So right now it's been retracing backwards, but I still expect the market go down this way continuously. Okay so far? I hope it's clear so far. Because this is basically what I do every time I screen the charts, and during my live streams or video sessions on my YouTube channel, based on this concept, I give you my analysis. So yeah, let's see. Oh, thank you for joining, everyone. I do see many comments. Great to see you. Yes, Arania says KTS is difficult but very effective. Yeah, once you get it, it becomes very effective. Yeah, before I used to take only one single time frame to trade, but I get many fake outs and retracements. So that's why I came up with the idea of looking at the charts by multiple time frames by Ichimoku. So okay, so yeah, let's move on. So here, this is the potential downtrend, so I look for the sell chance. And so as you already might know, in the lower time frames, I don't use Ichimoku Kinko Hyo anymore because Ichimoku is a bit lagging on these lower time frames. So I use Bollinger Band and stochastics and lines, price actions, and candlestick patterns to capture exact trading edge. So here right now, I see the price is going up, and this is going up to the 20 SMA. So this is Bollinger Band. I place 2 bands on the Bollinger Band, one with a deviation 1 and other one with deviation 2, with 2 bands with a 20 SMA. And also in the stochastics, I use 30, 10, 10, percent K30, percent D's 10, and percent slowing is 10. So 30, 10, 10 is my stochastic setting. And simply I look for an edge right now. So yeah, so so right now I don't see any edge because the market is just retracing backwards, and this is going within the band, and yeah, but this is going down. So as the market retraces backwards here, first thing that I come in mind is that the this retracement. I want to see this, if this retracement is at one of the Fibonacci levels, so that from here we can expect the market go down this way. If this is at one of the Fibonacci levels, then there is a higher chance that the market bounces here and it goes down this way. So in this 5-minute chart, I draw Fibonacci level. You know, Fibonacci level works on any time frames, and I use it on the daily chart or any time frames, but when it comes to entry edge, I use it based on the 5 or 15-minute time frame. So here in this case, in this example of 5-minute chart, this is the reversed N wave potentially. So if the market is moving right now, I draw the Fibonacci level right now and see if the market is at one of the Fibonacci levels now. So I take the Fibonacci retracement tool and drag it from the most recent high in 5-minute chart to most recent low in 5, like this. And I see that the market is at 38.2% level. So if it bounces by 38.2% level, then you can be confident that the market goes down from here in 5-minute chart. And most likely it will, because this is, as we also already saw it, this is downtrending per daily chart and also downtrending in 1-hour chart as per Ichimoku. So in 5, I expect the market goes down, bearish in wave also. And this is actually why I use this Fibonacci bounce as one of the confirmations. So in this way, I look for multiple confirmations. I don't use Fibonacci bounce only to capture the edge, because of course Fibonacci level is not 100%. Sometimes it becomes fake signal. So I came up with the idea of combining multiple confirmations in these lower time frames. Especially this is a 5-minute chart. The market goes up and down, very spiky, and sometimes gives us fake signals. So it's better to have multiple confirmations for entries. And Fibonacci bounce in this case is just one of the confirmations. Okay, yeah, so let me come back to some comments now. Let's see. Okay, Shamal says, Mr. K, how do you look for same broker that delay in exciting my closing order by 23 seconds? If you have a stable and good broker, there shouldn't be like any lags. So for myself, I use TradingView for market analysis, and I take trades by MT5, and it's been working great for me. So yeah, simply you can follow, but you have to be careful of the spread. Sometimes broker offers very high spread, so if that's the case, you might want to change the broker. Dan says, do you correlate pairs to help your analysis? For example, if Euro JPY is like trending down and Pound JPY is like going down, do you conclude that Euro Pound will also trend down even if Ichimoku doesn't show it clearly? I follow Ichimoku direction. So if Euro JPY is going down and Pound JPY is also going down, then that means JPY is strong, most likely. And that's why both pairs are trending downwards. And I don't think it will affect the Euro-Pound movement. Okay, thank you for joining, everyone. Great to see you. So let me come back to some comments, and I will continue to discuss on my strategy. Okay, Aditya says, Mr. K, why not looking for the edge before the Kijun Sen goes up and down instead of Ichimoku being able to calculate exactly when the candles change direction? Yeah, so that's like advanced Ichimoku technique, yes. For now, for today's live streams, or usually, I look for the angle of Kijun and Kumo. But yes, if you know the calculation of Ichimoku, then you can kind of foresee in how many candles in the future the Kijun and Kumo points downwards. And by expecting that, you can place orders before that. That's possible. Thoron says, hello K sir, good evening. One question, previous day I backtested Bitcoin. I saw a square Kumo where both single span AB are square. What does it mean? Can you please clarify? When you see single span AB square or flat, that means the market is flat ranging in the long term. Kumo shows the long term market momentum, and Kijun Sen shows midterm, and Tenkan Sen shows a short term. So when you see both the Kumo Senko span AB flat and like square looking, then that means that's flat in the longer time frame. All right, thank you for joining, everyone. Great to see you. Okay, Tyler says, okay, do you also use Forex Tester 5 software for money management and analysis? Yes, I do use the Forex Tester 5 for market analysis and also risk management. Yes, because as you take trades, you can see stats, like how many trades you take, you get win rate, and also profit factor, drawdown, and max profit, max loss. You get all these stats data after taking some trades. So yeah, it helps to see overall performance. And this is something that you cannot do in the trading view. You can just backtest by bar replay on trading view, but you cannot technically take trades and exit and place stop losses on the previous charts. But in Forex Tester, you can do it. Okay, so yeah, so let's continue the discussion. So yeah, so here there is a potential Fibonacci bounce, but it might go up from here. So we'll see. If it goes up, then the next level, the potential bounce will be 50 level, and also if it breaks it, then the next potential retracement is going to be on 61.8% level. So we'll see which one of these levels the market will be bouncing. And also we pay attention to the price action, Bollinger Band, and stochastics movements. So let me move the candles one by one based on this 5-minute chart. So I will just forward just one. Okay, so there's a bearishness. So here we find that there is a 38.2% bounce. And in this case, there is not bearish in the wave yet, but there is a potential bearish in the wave from here. And that's what's most important. I don't predict the future. I don't predict that the market goes down this way. If it goes down, then there should be a bounce here, and there should be some other confirmations for sell. But if it doesn't happen, let's say the market initially goes down this way, but it might be double bottom and soon goes up this way too. It happens many times. If that is the case, then simply you exit. But most likely, most of the time, the market goes down this way because, as we saw earlier, the daily chart is going down and 1 hour chart is also going down in this way. So yeah, here we have one confirmation is that the market bounces by the Fibonacci level, 38.2%, and also this is also something that I use is that I use the counter trend line. So I draw the counter trend line like this way. This is against the trend direction, and this is the effective way to capture the potential N wave continuously. So the market is going down this way right now, and it's downtrending on this reversed N wave, and there is a breakout of this counter trend line, and this is also the potential downtrend. So that will be my second confirmation. And also here, if you take a closer look at this price action, you can find that there is an outside bar. This is outside. You see the most recent candle has been including the previous 3 candles. And this is called outside bar. And this is one of the reversal candlestick patterns. You know, these bullish candle, bearish candle, bullish candle, and on the 4th candlestick became bearish, and it included all the 3 past candles. And so if you see the next 1 candlestick forms bearish, then this is a good sign for this continuous downtrend. So I will wait 1 more candlestick to see if the market breaks the previous engulfing, outside bar. So like this, I build up these confirmations one by one. So I don't trust one single confirmation. This is like holistic view of the market. So first you start from bigger picture, daily chart or forward chart, and break it down to the 5-minute chart. And now you're actually looking at like a microscope and looking for exactly where to place the sell. So yeah, let me just move one more candlestick, and if it becomes bearish, then I will take that sell from there. So let's see. Okay, so now next candlestick became bullish, so let's wait until it goes down this way. So I will just move one more. Okay, still a bit ranging. Okay, so now this is a sign. This is a good sign. Exactly, this candlestick is a good sign for the selling edge. So we expect the market go down on the reversed N wave, like in this direction. Yeah, so and yeah, so here I place a sell. So let me place a sell right now. I go to market order, and I just place a 0.1 lot sizing, and make sure it's sell, and place stop loss 10 pips above, and press sell button. So here I placed the sell position. In terms of stop loss, 10 pips a bit too tight, so in this case I will take the previous high as here, which is 32 pips above. Okay, so this is going to be my trade, and hopefully it goes bearish downtrend in this direction. If it goes bullish, then I will talk about the exit timing. If it goes downtrending, then I will talk about the break-even timing. So we'll see which way it goes. Okay, so yeah, so let's move on. Let me move the candles one by one from here. Okay, so initially the market goes bearish, but still it doesn't break the previous support yet. So let me delete this Fibonacci level so that you can see it more clear. I will just delete this one, and delete the candle trend line too. Okay, so here is we placed it sell, and expecting the market breaks the support in 5 initially towards major direction. So let's see. Okay, so there is a nice breakout. So looks like, so here finally I can conclude that this is bearish. The market became bearish in wave by breaking the previous support level in 5-minute chart, you see. So but if it doesn't happen, if the breakout doesn't happen like this, and if the market goes up from here, then in my mind I see that the market is losing its bearishness, so I will think about the exit timing. So in today's demonstration, the market goes down this way, so from here I expect the market go down continuously in this direction. So yeah, let me move the candles a bit more. Okay, market's trending down this way. So here I see the potential next reverse in the wave. So initially we were waiting for the reverse in the wave happens from here, from this sell position, and it did. Reversed in the wave. So from here I expect the second reverse in the wave happens from here, like this, meaning that the market breaks the new support level in 5-minute chart, like this. And I can see that there is a strong support here because we have this pin bar whenever you see the pin bar, there are many stop loss orders below the pin bar. So I can see that there's a strong support from here. There are buyers coming in from this pin bar, so it might be a bit hard to break that support level. But once it breaks, then you see the second reversed in the wave, and when you see that, that's when I exactly move the stop loss to break even. So here, one more thing is that here I see the consecutive reversed in the wave like this. So I can move the stop loss originally to here to, I can lower the stop loss to the previous low like this, so that I don't risk 2% anymore. So speaking of the risk management, initially my 30 to 33 pips of stop loss, I take 2% risk per trade. So this is going to be 2% of my whole account. So if you are trading with 10,000 USD, then 2% will be $200. So this is, so if the market reverses backwards from here, then you lose 2% on your account. So, but by dragging the stop loss level to the previous high like this, then your risk percentage will decrease. This is going to be less than 1% risk per trade. This is maybe like 0.7 or 0.7 or 8% of risk that you're taking right now. So you can gradually move the stop loss level as the market grows like this way, and eventually you move the stop loss to break even like this, so that even the market retraces backwards from here, you don't lose. And this is my strategy of stop loss management or risk management. So, but from here, still I don't move the stop loss break even yet, because I don't see the consecutive bearish in the wave yet. So I will wait until the market breaks a support at 29218 level, and if it does, then I will move it to break even. Yeah, because this is a bit too tight to move the stop loss to break even. This is only like the reason why I don't move the stop loss to break even yet is that this is only like 8 pips or 9 pips in running profit. So if you move the stop loss to break even already like this, then you might have break even trade if the market reverses. You don't lose in this particular trade, but if you do this, you have too many break even trades. So it's not effective, it's not efficient. So in that sense, this is not a good timing for the break-even line yet. So yeah, let me move the candles one by one and see if the market breaks a support or not. If it doesn't, then I will talk about the exit time. Okay, so here now, I see the market reverses backwards, and I see the potential double bottom here. And the market is still technically below the position, but this is overall bearish, so still I hold the position. It just going up and down in a range. Okay, so looks like this is in UTC time zone, and this is the Asian Open. Okay, the market reverses backwards, but still holding it. Okay, so now afterwards, the market went upwards and went back to the stop loss. So this particular trade, when as a result, it became the loss. But this is only losing like 0.6 or 7% of my account. Yeah, unfortunately, it didn't go down, but this would be where I exit the trade. So if I can squeeze the chart like this, it was going like this. So I kept holding that sell because the higher time frames were still downtrending. So I was expecting the market go down. And afterwards, I saw the first double bottom and the market went up. And afterwards, it went downwards, but still in the range overall. And afterwards, I saw the bullish waves twice. And this was the right timing for exit, because from here, the market might be uptrending or to be in the range like this. And it might not be downtrending anytime soon. And right now, I think the daily chart is now flat. So let me come back to the daily chart. Yeah, so here's the daily chart. And as you can see, the Kumo Senko span B flat, A flat. And Kijun Sen is flat right now. So when you see this flatness, what that means is that the market can reverse all the way back to the Kijun Sen or Tenkan Sen. So from this reason also, this was the right timing for exit. And simply you wait until the Kumo points down and Kijun Sen points downwards, and then you come back to lower time frames and look for entry chance again. So this is actually the trade strategy of mine. In today's live stream, topic became about the risk management, but this is exactly how I cut the loss when the market reverses backwards. So I don't keep waiting until the market reverses all the way back to the Kijun Sen. This is too far for the stop loss. So my exit timing is based on the 5 or 15 minute time frames like this, so that I can minimize the risk per trade, but still I expect a bigger reward, because after all, I follow the daily chart or forward chart downtrend. Okay, let's see. Shamal says, can I do any legal issue for the mentioned 23 seconds delay in executing my closing order? 20 seconds is a bit too long, so yeah, maybe you can raise the issue to the broker. Yeah, 23 seconds is a bit too long. Yeah, if it's on the normal timing, like Asian, New York or London open time, if it's 23 seconds to close, it's a bit too long. Yeah. But let's say if the market opens on Monday or the new day when the market opens, then you can't execute or close the trades. And also, if there's a high volumes in the market, like by the news, FOMC or any big news related to the market, and if volume increases, then you might not gonna be able to close the positions. So, but unless it happens, you should be able to. Yeah, I've had an experience that I was holding the buy position on one of the pairs. I think it was a pound JPY. It was going up, and yeah, I was trading the profits. I was trading the profits, like running like 30 pips or 40 pips running profit, and there was a big news. So I already moved the stop loss to break even, but due to the big news, the market started to shoot down, and I was about to exit, and I was pressing the exit button, but it didn't execute it because there was a high volume in the market. So yeah, these things happen. So that's why you have to move the stop loss to break even or trade the stop loss as much as possible before these big events happen. Right, let's see. Hello, Dan. He says, why did you set stochastic 30-10-10, please? Why, by default, TradingView sets it at 14-1-3. Yeah, 30-10-10 is my setting. This is my favorite setting based on my experience. I have actually done it 5-3-3 or 10-7-7, and 2013 and I tried many different patterns for the stochastics, and yeah, 30-10-10 became my favorite one. It actually captures nicely for these cross signals, and also especially divergence works very great on this stochastic setting. All right. Exola, thank you for joining from South Africa. I think gold is a bit ranging right now, so not the best timing right now. Yeah, I saw the gold chart earlier, and it's ranging right now. Yeah, Justin, this is Forex Tester 5. Yep. Okay. All right. So yeah, let's see. So yeah, this was my exit timing. So yeah, I don't. So originally, if you can remember, originally my stop loss was all the way at the top, 33 pips above. This was my original stop loss, and this I take 2% risk per trade, but it doesn't mean that I lose 2% every time. Due to my risk management strategies, I usually exit the position before the price hit the stop loss. And this is actually one of the examples. So I lower the stop loss like this way, and the market simply hits the stop loss, and I lose only like less than 1%. So yeah, when to exit is also the very key to success in the long run. And these small losses are okay, because losses are the part of the process. And if the market trends towards a direction as per daily chart or forward chart, you can run profits in the long run, and it can cover all the previous losses by 1 or 2 or 3 trades in the month. And these are actually the trades that I'm looking for every month. So yeah, and that is my strategy. So that's why I don't really value the win rate. So I lose very small, like this way. I lose or break even trades many times, but when I win, when I can follow the trend, and when the market goes towards my direction, I run the preps like 70 pips, 80 pips, 100 pips, 150 pips I gain, and yeah, it covers all the previous small losses. Yeah, so that is my strategy. I hope you enjoyed today's YouTube live session. So yeah, so today once again it was the Forex Tester 5. I have to change it to 5. On Monday the market was retracing, ranging, so I thought it's a nice idea to show my strategy and also my mindset and multiple time frames. So yeah, so I guess yeah, looks like it's still ranging. So yeah, that's pretty much it for today's live stream. So once again, thank you for joining today. If you liked it, please press the like button. And tomorrow on Tuesday, it's going to be a video session, because I have things to do at night time. So I will record a video beforehand and upload at 2 p.m. in UTC time zone, exactly the same time as today. So yeah, I will see you on the video session tomorrow, or the live session on Wednesday and onwards. Alright, so once again, thank you for joining, and I will see you on the next one. So until then, please stay healthy, stay safe, and stay gold. Alright, bye for now. Mata ne. Thank you.